And in order to see higher prices on XRP or any other digital asset and the total cryptocurrency market cap, we need to see a bullish catalyst in the form of a risk on environment before we can see any of those higher prices. Okay, before we get started in today's fundamental report, we're going to do an overview of the total cryptocurrency market landscape. We're going to take a look at XRP's price action. And then after we do those two things, cover the fundamentals, cover XRP's price action. So that's what we're going to go over in today's video breakdown. I have gathered all the fundamentals from today. I wanted to take a little bit of time today. I didn't drop the fundamental report, gave you guys a little brief update at the beginning of the session like I usually do. Market's still holding on to gains, albeit there are some uncertainties that we need to be mindful of as we are seeing some new headline announcements via tariffs, and we are seeing some new comments from Fed speakers today. So waiting, as always, we did that, and the landscape is definitely something now that we need to be mindful of. So we're going to cover that in this report from July 14th, right? And so just last night in the Discord, you guys can see here, I'm always trying to tell you guys what I'm doing in advance, give you guys little subtle hints. And I mentioned to you guys Bitcoin possibly hitting into the $123,000 deltas. In my discussion and conversation with Angel in the general chat last night, you can see the timestamps. I'm always trying to deliver you guys timestamps. Sure enough, I was monitoring price action during Asia session last night, took a nice scalp position up into those 123 deltas before the market sold off and made about $20,000 on this trade. All right, so just to show you guys resilience, to have a positive mindset, even when you take massive hits in the market that set you back, trading is about your mindset, and who you are as an individual trader in these markets is not who you are when you're winning. It's who you are when you've taken losses and how you react to those losses. And I hope that, you know, the foundation that I've built for you guys, not only in who I am, but the information that we provide here in CYPRX has given you guys more optimism in your own trading capabilities and investing capabilities in this space, which I know for a few of you, if not all of you, have. Heading over here, one of the biggest call outs that I've seen in most recent times that Scalper has given to you guys is 121% call out ahead of the time using deltas on XLM. You guys can see, as always, I just like to provide screenshots for you all. This is a scalp delta at about 22 cents that Scalper had given when XLM was hovering at these levels on June 30th. You can see the screenshot there, June 30th, 2025 at 8:58 a.m. is when Scalper gave these deltas to you guys. And from that 22-cent threshold, XLM ran all the way up to 50 cents. I think it hit a high of 52 cents the other day, or maybe last night. I don't remember. But you can see that that is over 124% gains from the specific levels to the freaking T of a degree that Scalper is delivering for you guys. So if it's not myself giving you guys good fundamental insights or technical insights, it's Scalper delivering you guys accurate analysis. I 110% agree that it's super fast paced and it requires a lot of elbow grease for you guys to pay attention. But lock in, pick a currency pair, pay attention to the deltas, pay attention to the fundamental updates, and you guys will be on the right side of history. All right. So that was really cool, not to brag or boast, but just to show new market participants that are tapping into these Zoom calls that, you know, we're one of the most accurate, if not, I'd honestly say the most accurate retail trading community on the face of this internet. And you guys are a part of that. So really cool to see. Moving on to pick up where we left off in previous fundamentals. Yesterday and last week, we've seen a lot of rhetoric from the XRP army, the XRP community, and all these enthusiasts that act like they have credentials because they wear a suit and tie well and have a nice smile, say that we're going to see some significant catastrophic bullish price action because of FedNow going live today. Yet here we are, July 14th, Monday. FedNow is live, and we've yet to see that price action. As a matter of fact, inversely to that, here in the CYPRX community, we've been paying attention to institutional deltas, and one of the institutional sell deltas lies at that $3 threshold. And so just to show you guys, for anybody that's new on these calls, we've been talking about this for some time where I said reality check, XRP has barely cleared $3 before sellers stepped in and showed their hand defending at these higher prices. And in order to see higher prices on XRP or any other digital asset and the total cryptocurrency market cap, we need to see a bullish catalyst in the form of a risk on environment before we can see any of those higher prices due to trading activity and trading fundamentals. So that's what we're going to go over in today's call, in today's fundamental report. Then we'll touch on technical analysis. And again, I'm not trying to paint a pessimistic picture. I think that if the bullish catalysts that we cover in today's report continue, that we are going to see a higher XRP price. We're going to see price break above $3, retest that, and start trend towards higher delta levels, which again we'll cover in today's report. So, taking a look at the macro overview. At time of writing, the total cryptocurrency market cap remains in the green, up about $42 billion intraday, still holding above last week's weekly lows. Now stalling around $3.8 trillion mark. After last week's and the weekend rally, markets have taken a breather, reflecting investor caution as they digest rising global tensions, hawkish Fed rhetoric that we got today, and tomorrow's upcoming US inflation data via the core CPI. As forecasted in our earlier reports, the absence of a net new bullish catalyst has led to price consolidation across major assets. XRP, for instance, has once again failed to break above the $3 resistance, confirming sell pressure near that psychological level. And you can see, and again, not to call out these other influencers on the internet, but you can see this rhetoric amongst the XRP army. It's like they're delusional into thinking that things are just going to happen overnight or for no reason. We have to understand that there needs to be a catalyst behind price action, and that is the picture that we're going to paint for you guys here today. Here is XRP's price action, where we can see just the other day we tested, buyers made an attempt to break above $3, and today they made another attempt. As of time of recording, they have not done so yet. Buyers have failed to overpower sellers at this threshold. That means that sellers are still sitting there with large orders, defending that $3 position. And in order for buyers to overcome that, push through that with a lot of bullish and buy volume momentum, we need to see some type of catalyst supporting that type of move. It is not off the table, but let's dial back to some realistic perspectives and understand what those catalysts would be. On the tariff front, so specifically focusing on EU, Japan, and Russia, as those are all the recent announcements that we've gotten as of today. One of the dominant narratives affecting risk sentiment today is the growing tensions between the United States and the European Union over tariff disputes. So here is where we stand on the EU front. Right now, the EU has delayed its planned countermeasures against the US exports initially set to activate on July 15th, now pushed to early August. I believe August 1st is the new date to be attentive to, in hopes of securing a negotiated agreement. Von der Leyen noted that the EU prefers to negotiate trade solutions with the United States instead of retaliatory measures or any escalated measures. This follows Trump's Saturday letter to the EU threatening to impose 30% tariffs on the European goods starting August 1st, unless a deal is reached. Ursula, president of the European Commission, stated that we will use that time that we have now till the 1st of August to negotiate. I highlighted that rhetoric in bold because the market is still holding on to an optimistic perspective. But we are also preparing for future countermeasures. Moros, the EU Trade Commissioner, warned that if the tariff stays at 30% plus, simply trading as we know it will not continue, with huge negative effects on both sides of the Atlantic. He added that a tariff of this scale would practically prohibit trade. The EU has already drafted a second round of countermeasures targeting $72 billion, 84 billion US of US goods. This signals the seriousness of the situation. But for now, markets are not reacting negatively, still pricing in the possibility of a diplomatic resolution. So the positive scenario on the EU and US front would be if the EU and the US reach a preliminary agreement before August 1st, possibly locking in a 10% tariff cap. This would diffuse the trade conflict, restore investor confidence, and remove a key overhang in global markets. That is what we would ideally like to see on the EU and US front the remainder of this week, or as we head into the next 2 weeks, inching closer to that new date of August 1st. A risk-off scenario would likely unfold if the 30% plus tariffs are implemented and countermeasures like retaliations follow. This could ignite a full-blown transatlantic trade war, destabilizing global growth and expectations and triggering safe haven flows at the expense of crypto and equities. So be mindful of that moving forward. I will continue to update you guys. If you have not been paying attention, Usually during the evening time, Asia, and then in the morning time, if I'm awake during London session, I try to update you guys in the fundamental section of any ongoing fundamentals. Myself and Scalper have been giving you guys some good updates in here. Hopefully, you guys are clicking them open and reading them thoroughly yourself so that you can paint your own perspective by digesting the information that's in there. And then as well, you guys have the Michael breaking news section where this dude is like a freaking goat when it comes to finding fundamentals, constantly dropping new formulated documents and fundamentals that are ongoing. All right. Back to the report. On the Russian headline front, we just saw Trump announce severe tariffs on Russia if no deal is announced in 50 days. So that puts us, relatively speaking, in the middle of August, towards the end of August, or maybe a little bit past August, maybe like July, August, September timeframe, early September, right? In a press briefing with NATO Secretary General Mark Rutte, Trump escalated threats toward Russia, stating that we're very unhappy with them and we're going to be doing very severe tariffs if we don't have a deal within 50 days. Tariffs at about 100%. Although he downplayed the urgency by shifting focus to Ukraine, the market currently appears unbothered by these developments. Still, the threat of 100% tariffs on Russia and possible secondary sanctions remain a headline risk to continue to monitor. So right now the market is not pricing this in as negative because there's obviously, of course, been no solidification of that 100% tariff taking place. But Trump has given them a window of 50 days to respond, and if that does not take place in 50 days, they don't respond, and we continue to see negative negotiations between the two jurisdictions. 100% tariff announcement being solidified and implemented would probably be negative for risk assets. So just keep that on the forefront. We will continue to monitor that. On the Japan front. Uncertainties continued to persist. Trump repeated criticism of Japan's unfair trade practices in a recent article, threatening a 25% reciprocal tariff on all Japanese imports starting August 1st. However, he hinted that Tokyo is beginning to shift, which is positive. I'm actually going to highlight that in bold. He mentioned that it is changing very rapidly. No formal progress has been made public as of now, but markets still remain hopeful. As we can see, the total cryptocurrency market cap is still holding on to gains, so they're not pricing any negative implications from this announcement for a last-minute bilateral resolution. And you can see that in the rhetoric here. U.S. President Donald Trump criticized Japan over ongoing trade negotiations on Sunday, but he did he did not hint or elaborate that Japan may have made any concessions in tariff talks. So keep in mind that if the market does not have a reason to be fearful, it's going to hold and grip onto the last narrative that had been implemented in the market. And the last narrative was that trade negotiations between Japan and the United States were showing progress, still stalling out, but still possible negotiations were on the forefront. So just because trade negotiations are still stalling doesn't mean that they're souring or that they're turning bad or negative. So the market's still going to hold on to that optimistic narrative in the time being, unless something is announced otherwise. Outside of the trade negotiations, that's all that I could find in terms of recent updates from today. So we're still waiting on Canada. We're still waiting on updates from Mexico, China, pretty much every major jurisdiction. We're still waiting on updates. So just be mindful that these things could change on the drop of a dime. I'll continue to update you guys as these fundamentals break. As I mentioned in yesterday's report, we have multiple Fed speakers scattered throughout the day, and they started off this week not necessarily supporting a risk-on market environment, albeit nothing negative has changed yet. One Fed speaker is not going to change the current risk-on narrative, but today we did get some hawkish-leaning comments from one of the Fed speakers that does not necessarily hold a lot of weight when she speaks, but still something we need to be mindful of in case the remainder of this week, the rest of the Fed speakers mirror what Fed Hammock said today in her comments. So we got hawkish leaning comments from Fed rhetoric, from Fed Hammock, where she said things like goes into every Fed meeting with an open mind. Goes into every Fed meeting with an open mind. Fed Hammock said that we are not there yet on inflation. It's important to stay restrictive on monetary policy. So what does that mean? That paints a picture of higher for longer interest rates environment. And then she also said that she does not see any imminent need to cut rates. That is also a hawkish comment. So I said here today, Fed's Hammock offered a mixed tone, saying that she sees no need for imminent rate hikes, a more hawkish contrast from the recent dovish tone from other Fed speakers that we got from last week, especially in the meeting in minutes. If you guys remember last week's Zoom call, it was on Wednesday last week where we broke down in detail, picked apart the Fed meeting in minutes, and I showed you guys why the meeting in minutes leaned more dovish, supporting rate cut bets and boosting risk on sentiment rather than weighing on risk sentiment and supporting a hawkish commentary rhetoric. All right. So make sure that if you guys didn't watch that, you go back and check that out. The key focus ahead is going to be the core CPI and PPI inflation data tomorrow on Tuesday. So the main event for markets this week will be tomorrow's inflation data. Right now, the consensus expects that core CPI is set to tick up from 2.8% to 2.9% year over year. This slight increase, if realized, is most likely already priced into the market price action. As Citibank's Stuart Kaiser noted, if the data is already expected to get a little worse, the rally could still continue in risk assets even if the data comes in higher than ideal. This ties into the Citi Economic Surprise Index, which shows recent data beating lowered expectations. In other words, the market is less sensitive to moderate disappointments as long as they stay within forecasted ranges. So as long as the data does not come out significantly above the market forecast, the rally and sustained rally in risk assets is likely to continue as the market's probably already priced that in. Here, you guys can watch that video panel discussion of this gentleman representative from this organization, or you can read the transcript and you can see where I gathered this information from. I included that link here for you guys if you want to check that out. So let's really break down these key scenarios tomorrow. There's really only one scenario tomorrow that I believe will print a risk off market mood. And that is, again, that scenario where we might see the CPI come out higher than the market is expecting, which is unlikely as of right now, but still a possibility that we need to be mindful of. Okay. Right now, overall, just to wrap this up in a nutshell so nobody is confused, just because the market is taking a breather, the market sentiment is still heavily risk on. There have been no net new fundamentals that have changed the sentiment from last week heading into this week to spark a reversal in the current risk on environment. So that means that we could continue to see altcoins rally. We could continue to see Bitcoin rally as long as there's nothing that changes the current fundamental environment, which is right now risk on. So scenario number one, this would be the rainbow rally scenario that we like to call it, right? Where we see a rainbow scenario across the board, a scenario that just solely does not paint any mixed confusion and supports risk assets. This would be if we see core CPI surprise to the downside. That means it comes out lower than the market's expecting, which would be significant because it would solidify last week's Fed perspective that inflationary fears and risks to the upside are behind us and that tariff implications are not going to have a high impact on inflation. This would be if we saw inflation come out below 2.8%, even significantly lower than that, 2.7% or lower, slightly unrealistic, but still possible, right? The market would interpret this as a sign of slowing inflation, reviving hopes for imminent rate cuts later on in this year. Crypto and equity would likely rally, with crypto potentially breaking back above $3.8 trillion and XRP revisiting or breaking significantly above $3 plus. US dollar and yields would likely decline as demand would shift back into risk assets, right? So in a scenario like this, just taking a look at XRP's price action and the total cryptocurrency market cap, like I said, we'll revisit Bitcoin and ETH in just a second. So in an environment where tomorrow we continue to see a risk on supportive environment for crypto, lower inflationary readings that support an imminent rate cut narrative, and no net new tariff headlines that spark fear, uncertainty, and doubt or demand for safe haven, the two likely scenarios that we're looking at on XRP. Scenario number one would be a slight retracement down into this most recent higher low, pushing price action slightly above the buy delta at $2.56. Less likely scenario, but still possible as buyers reposition to come back and defend at lower prices to then take price back to the upside. And scenario number two, in that rainbow scenario, would be a break above $3, retest $3 to turn it into support, and for price to continue its move to the upside. The next hurdle that we need to overcome to see any higher prices on XRP is the next sell delta at $3.16. If we do end up breaking that, the next hurdle above that is $3.82 before sellers could possibly show their hand. For the total cryptocurrency market cap, similar scenario. Right now, we still have this higher low that comes in at about $3.6 trillion. So if we do see some choppy price action tomorrow after the CPI announcement, buyers repositioning themselves at a discounted price, we could see price pull back down into this discount, buyers defend to then push prices back to the upside. Or we could see consolidation at around these highs, turning 3.68 trillion into support and a continuation sustainable move to the upside. Scenario number two, a muted uptick that the market shrugs off. This is probably what's going to happen tomorrow. I wouldn't be surprised if tomorrow we see a muted impact from the CPI and then the market waits for further data Wednesday when we get the PPI data so it has a full spectrum of how the inflation is going to come out this week. That would be where core CPI prints at 2.9 to 3%, in line or slightly above the market forecast, or even a print at 2.8%. Fed speakers maintaining a measured tone, labeling inflation rising as temporary. So pretty much continuing their rhetoric from last week's FOMC meeting in minutes, that even though we might see a slight uptick in inflation, they believe that it is temporary and it is not going to last long. The markets continue to digest that data calmly, and consolidation continues with no major risk-off move. I would expect under these conditions a slight bullish increase or more sideways price action across crypto until clearer catalysts arrive. So pretty much similar scenarios to the bullish rainbow scenario in terms of price action. Scenario number three. All right, this would be a hot print in a risk-off environment. So tomorrow, if we were to see any new tariff headlines that spark fear, uncertainty, and doubt, flight to safe haven currencies like gold, dollar, or yen. And then if the CPI tomorrow comes out significantly above market expectations, market quickly would reprice rate cut expectations, driving up the dollar strength and causing a sell-off in risk assets. Crypto would likely see a sharp intraday retracement, potentially retesting $3.4 trillion or lower, while XRP would likely pull back to $2.56 to $2.24 or the next buy delta on the horizon. So that would look like this and the total cryptocurrency market cap. Buyers making a failed attempt to push price action higher, sellers overpowering, breaking these previous higher structure lows, retesting below $3.68 trillion, and making a full reversal back down to 3.4 trillion, starting to come closer to last week's low. XRP price action, like I said, we're currently hovering at the $3 delta. If we did see a risk-off environment painted tomorrow, most likely we would see a rejection of $3 to possibly $3.16, sellers defending their position, enough to overpower buyers, buyers failing to break back above the $3 threshold, sellers overpowering with enough volume to send price back down to retrace this bullish move from last week, making our way back down to $2.56 to possibly $2.42 to the worst case scenario, a full retracement of last week's move at $2.26. So the first bearish target would be $2.56 before we can reconsider buyers defending their positions if we see a risk-off market event tomorrow. If we break $2.56, that would open the door for a possible revisitation of 242 to 226. But again, take this level by level, because if we did come in at 256, buyers could make an attempt to defend, and we could see them hold off sellers and push price back to the upside. So just keep that in mind. All right. In conclusion, right now, trade tensions between the US and the EU are dominant macro overhangs, but are not yet triggering full-scale fear. Russia and Japan trade headlines remain on the radar, but haven't spooked markets yet. The Fed's tone is leaning slightly hawkish as of time of recording in terms of the recent Fed speakers, but without strong inflation data to back it up, that bias may not translate into any action. Inflation data tomorrow is key. It's not just about what prints, but how it compares to the market expectations. That is extremely important, right? So after the data comes out tomorrow, we need to see how the market digests, whether or not that's going to lead to continued higher inflation, whether the market even cares about that. Like I said, I personally think the market's already priced it in, and it's still taking into account all the dovish rhetoric that we got last week from Fed speakers, where like most of them supported rate cuts later on this year, right? So when the Fed speakers respond to the inflationary data that we get this week, as we do have multiple different Fed speakers this week, we need to see what they say about the inflationary data moving forward. If the data does surprise positively, it could serve as a bullish tailwind crypto needs to break out of its current range. Until then, we need to continue to stay nimble, monitor global trade developments, and keep a close eye on Fed commentary along with tomorrow's CPI data. All right. So, like I said, the path of least resistance is still skewed to the upside across altcoins, Bitcoin, the total cryptocurrency market cap, and other risk assets, as long as the sentiment does not sour, or shift from today's recording. So, you guys still have this list of what to expect this week for a risk on environment, what to expect this week if the market sentiment sours, and what would create that environment. And as of time of recording this video breakdown, the only thing that we've gotten from this list as of time of recording is one hawkish Fed speaker that we got today. So you can clearly see how impactful this list is to pay attention to, as we have yet to get anything else that would weigh on market sentiment. So for now, the path of least resistance still remains to the upside. All right. Outside of that, I'll leave the floor open for questions on that note. And if not, then we'll transition over into Bitcoin and take a look at Ethereum as well. Go ahead, D'Angelo.